Hello, everyone. Welcome to Feedstuffs 365. I'm Sarah Muirhead. Since the U.S. Israeli military strikes on Iran in late February and early March, oil and gas prices have experienced significant volatility. What might this mean for the global energy market overall and for U.S. agriculture as we enter into the planting season? Joining us to discuss just that is Dr. Gregg Ibendahl, Associate Professor of Agricultural Economics at Kansas State University. Welcome, Greg. Thank you for being with us today.
I'm glad to be with you guys today.
For those of you in our audience that are tuning in, we thank you for being here. If you have any questions, feel free to post those in the chat area on your screen. If you're joining us from social media, you can post your questions directly in your social feed. So, Greg, talk to us about how the instability in the Middle East, in particular with the recent conflicts, how that's affecting the global oil and gas prices and subsequently the cost of fuel for agricultural operations.
Well, it's certainly kind of made a mess of the things as far as trying to do any kind of prediction stuff. So, this situation with bombing Iran is really not all that unique because we had a similar thing that affected the oil markets a few years back whenever Russia invaded Ukraine. I don't know if you guys remember what happened back at that point in time. But really the day Russia invaded Ukraine, because Russia is one of the major oil exporters in the world, I think either one or two behind maybe Saudi Arabia, but still a major player in the oil market. Oil prices at that point jumped up from about the mid-70 range up to about 130 almost overnight because there was great concern with the markets about whether Russia was going to be able to get their oil out of their country or not. Well, what happened was not really a whole lot really did happen because Russia, still exporting oil about the same amount as they did before. So about as quick as oil prices went up, they started coming back down. In fact, about 2 or 3 months after the whole Russian-Ukraine war started, oil prices actually dropped below where they were before the whole Russian-Ukraine war started. So that gives you an idea of what could happen because traders get concerned about the world oil market. Certainly everyone's a big player and everyone uses oil. So whatever disrupts potential world supply has the ability to raise prices all over the place. So when this thing started, when we started bombing Iran, prices went up, but not near as much as what they did at the time during the Russian-Ukraine war thing. I think traders kind of learned the lesson that, there's probably some risk in there. Maybe we overpriced it too much then. So initially prices went up maybe from like $65 to about $75. That was the initial shock. But since then, there's been a lot more volatility happen. Iran's been threatening to close the Straits of Hormuz and disrupt shipping like that. So then we saw oil prices, I think it was like Sunday, jump up to like $120 a barrel. They've kind of jumped back down. I think right now, when I looked before we started this broadcast, I think they were right about maybe just below 90. So it's been a very, very volatile oil market. And certainly the oil price has a greater effect on what happens with the diesel price.
And that impacts agriculture quite a bit.
Yeah, there's a strong correlation between the oil price and the diesel price. In fact, prices tend to jump up almost immediately when something happens to the oil price. So my analysis basically shows that for every $10 in the oil price increase, that leads to about a 42-cent price in the price of diesel fuel. Gasoline has a very similar thing. It's even tied even more closely to the price of oil. So anytime we see oil prices go up, you can almost expect diesel prices are going to go up right away after that.
There was some recent news of the release of 400 million barrels of oil into the global market. What impact might this have? Is it something that's going to help to cap some of these surging prices or calm any kind of instability that's out there? Is it going to make that much of a difference?
I don't really think it's really going to tell you the truth. If you look at the situation where we are in the U.S. right now, we are really pretty much neutral when it comes to the use of oil. We export some. We export some of our lighter weight oils and we import some heavyweight oils from Canada. But in the big scheme of things, we're really pretty much neutral when it comes to oil. So if you were back in the 70s, that wasn't the situation. We were actually importing about 70% of our oil from the Middle East. So, if that would have happened like what we see right now, that kind of situation, then I think you'd see a lot bigger effects on the fuel prices. But because we are kind of neutral, I mean, there's a separate market for the U.S. oil, the WTI, as opposed to the European Brent crude market. But they're closely tied together, though. So, whenever we see a disruption, that's going to raise prices all over. But really, we're not really all that dependent upon foreign oil anymore. So, releasing extra oil, that may help, but I'm not sure what's going to do for us because we're already kind of neutral when it comes to importing and exporting. And the other thing that really affects us here in the U.S., we're kind of constrained by our refinery capacity here in the U.S. So even if we had a bunch more oil available, we're not going to be able to make any more diesel fuel or gasoline than we were before, just because we're using our refineries pretty much at 95% levels or higher here. So that, there may be a little bit of effect of calming the markets, but I don't think in the grand scheme of things, it's gonna make a big difference. The big thing is, can we get oil through the Straits of Hormuz? Once they get that issue settled, I think you'll see prices kind of start to stabilize.
So, what do you see? Do you see any potential disruptions to the global supply chain for agricultural inputs like fertilizer, chemicals, those things, as well as say the oil and diesel?
Yeah, that's the other thing for farmers, especially grain farmers, is that not only are they pretty dependent upon diesel fuel, not so much in the grand scheme of all the a list of expenses, because really fuel prices are down below, like machinery, fertilizer, seed, and some of those things. So it's from a total perspective for percent of total production expenses, it's kind of down the list, but from a dollar amount, it's pretty big number. I just looked at some of our Kansas farm management programs, and the average grain farmer spent about $30,000 in fuel last year. So from that perspective, it's a big deal. But looking at that and saying that, I have a model that predicts fertilizer prices, and it's closely tied to what the oil price is. In fact, when we make nitrogen fertilizer, it's the direct component of burning natural gas. And natural gas and oil are direct competitors for each other. And so if the oil price goes up, the natural gas price goes up, which means fertilizer price is going up. And really, for a grain farm, the effect on fertilizer prices, it's a little bit smaller, but we buy a lot more fertilizer. So my analysis for grain farms showed that going from $65 to $90 a barrel actually raised total fuel cost by about $10,000. The change to fertilizer prices was about $12,000. So even though it's a smaller percent, because fertilizer is a bigger input item, it makes the total expenses go up. So yeah, from the fertilizer side, it's a big deal for farmers.
What role does the Middle East play in the global trade of agricultural products, and how might the conflicts in the region there be impact, the export and import dynamics out there?
That's kind of an unknown at this point in time, how that's going to affect things. Certainly with Iran kind of trying to shut off shipping, you don't know what it's going to do to transportation costs, getting things in and out for different world markets like that. And certainly it's going to make shipping much higher as well whenever fuel prices go up here too. So there's a lot of unknowns that we're trying to get kind of clarified and see how it's going to affect things. And I think markets are kind of skittish at the moment just because they don't know what things are going to go. Markets traders would like to see stability and have an idea so they can kind of plan for the future. Right now, we're not in that situation. Things are in a bit of flux. We don't know for sure which way oil prices are going to go. I almost have to look at the oil price every hour to kind of see which way it's going and see what traders think it's going to do here. So certainly a lot of uncertainty going on. I think we do, once we kind of get some idea about getting oil in and out, I think you'll start to see oil prices go back down and fuel prices go back down accordingly here. But in the meantime, there's a lot of uncertainty going on.
Do conflicts in the Middle East, is there any impact, any concern about food security in countries that rely heavily on agricultural imports from that region?
Yeah, I think it might. If I was in Europe, I'd be a lot more concerned about things than here in the U.S. because, as I mentioned, we're kind of neutral when it comes to use of fuel. So we're not going to run out of gas or oil anytime here in the U.S. Although certainly transportation costs are going to be high, and when it comes to food, we're pretty much self-sufficient there too. Although we do a lot of trade. So from U.S. consumers, we're a little bit insulated from things. If you're in Europe and you have to depend on getting oil from the Middle East, or if you're depending upon bringing in food, yeah, then those are kind of big concerns to worry about here. So I'm kind of glad I live in the U.S. at this point in time.
There you go, right? So, how can agricultural businesses and policymakers, how can they prepare for or mitigate the risks associated with Middle East conflicts, such as supply chain disruptions, price volatility?
Well, I'm not sure you can protect yourself totally. So I think for this year, I'm not sure how many farmers had topped up their fuel tanks before going into this, but probably a lot of them have. But again, a lot of them aren't going to have enough fuel to certainly get through the whole spring planting season. So you're kind of at the mercy of what the fuel markets are for that. For fertilizer, I'm not quite so worried this year anyway, because I'm willing to bet most farmers probably had most of their fertilizer either booked or on farm storage. So even though we may see some rise in fertilizer prices this summer if oil prices stay high, I think for this spring, I don't think that's going to affect them a whole lot at this point in time. Now, we get through summer and oil stays above, what it was. It was $65 before this whole thing started. I think today we're at $90. So if we say it's the $90 range, you're going to see some increases in nitrogen fertilizer prices, maybe probably about a 10% or more increase in those. But again, that won't happen probably till later on in the summer, which could affect wheat planting in the fall and maybe next as you start to look at the following year's fertilizer for next spring.
Really depends on how long the conflicts, how long they last, and how significant they become. I'm sure there's lots of variables at this point still.
Yeah, we hope it doesn't last too long. Certainly, we can get this thing kind of wrapped up within a month. I think you'll see this will kind of look like a blip on the road, 5 years from now when you go back and look at this. But if it stretches out several months, then this could be something we're going to look at back and you can point your finger to.
Any final thoughts or recommendations to leave our audience with here today?
Well, so I mentioned mainly on the supply side. There's a little bit of effect going on the demand side as well. That has to relate to how people buy things whenever there's a panic and they think there may be a disruption. You probably remember what happened during COVID with the toilet paper situation where everyone went out and bought toilet paper just because the neighbor was buying it and the price was going up. They probably didn't need to buy toilet paper, but people did anyway. You see some of that happen on the demand side when it comes to fuel too. So probably especially on the gasoline side. So you saw a lot of consumers filling up their gas tank when there's probably more than half full. So that actually creates a price bump higher than what my model would say. I would say 40 cents for diesel and gas for every $10 in the oil price. Well, you probably saw some places where it was higher. That was really due to probably some panic buying by consumers.
Very good. Well, Gregg Ibendahl, Associate Professor of Agricultural Economics at Kansas State University, thank you so much for joining us here today.
Yeah, I'm glad to be with you guys.
Likewise, we appreciate all of you tuning in as well. Until next time, for Feedstuffs, I'm Sarah Muirhead.